Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the Department of Economic Development in Dubai has formed a committee to study requests from GCC nationals to allow them to set up partnership firms with foreigners without an Emirati partner. According to news agency WAM, the initiative is part of the DED's efforts to strengthen partnerships in the business community, to attract new capital and to raise overall competitiveness in Dubai, and to also enhance the Emirates' position in the global economic landscape. It added that the business initiatives to be evaluated by the committee must also fall under the industrial, services, tourism or other sectors that add critical value to the Emirates' economy. The minimum capital in each project must be 10 million dirhams, which should be transferred from outside to any of the UAE banks with a certificate of deposit. The 719.37 million dirham parallel roads project will be open for traffic by the end of the year, as announced by the Road and Transport Authority. According to a local paper, 68% of the mega project is complete. And when open, the bridges will connect Street 312 with Sheikh Rashid bin Saeed Road and Dubai Al Ain, bypassing the Trade Centre roundabout. The bridges will extend 4,250 metres with 2 lanes in each direction, in addition to a 120-metre-long concrete bridge for traffic heading towards Al Maktoum Bridge. His Excellency Mata Al Tayyer, the chairman of the board and executive director of the RTA, was quoted as saying that the bridges will ensure free-flowing traffic from the downtown Dubai area towards Al Maktoum Bridge and Al Gahood Bridge. Markets were largely range-bound in trading last week, with the US dollar making substantial gains against the British pound after the UK confirmed that growth during the fourth quarter contracted to minus 0.3%. Against the euro, the US dollar was slightly weaker and closing the week at a more than 10-month high at 1.3462. With several key figures being announced this week from the US, we spoke to Gaurav Kashyap, the head of the DGCX desk at Al Pari Middle East, about how the markets will fare.
Market focus this week will be squarely on the US economic calendar, with several key event risks which will be driving markets in the week ahead. First and foremost, we have the US FOMC policy meeting announcement on Wednesday. We're not expecting to see any major surprises from Ben Bernanke following December's meeting, where they announced that they would be ramping up their asset purchases to up to 85 billion a month in a bid to bring that unemployment rate down to 6.5%. Now, we will be watching for Ben Bernanke's comments and his views on how the US jobs creation situation is looking. But overall, we'll turn our focus to Friday's US non-farm payroll reading, where we're expected to see 155,000 new jobs added. Now, we could see some upward revisions to the previous month's reading, December's reading, but this would be as a result of seasonal hiring and seasonal adjustments. So overall, we're expecting the overall unemployment rate to remain at 7.8%. This data is important because we've seen that initial jobless claims over the past few weeks have dropped, but once again, that could be as a result of seasonal hiring. So no major surprises on the upside expected from that US NFP report. Also on tap for this week is the US GDP reading. Remember, we had a very robust growth between July and September, Q3, where the US economy logged 3.1% in growth. That's expected to pull back a little bit during Q4, with growth expected to be pegged at about 1.2%. Finally, from the US, we have on Friday the US index for manufacturing, the ISM for manufacturing. That's expected to come in at 50.5. So overall, it's going to be a pretty mixed week for the US dollar. It could be slightly negative for the US dollar, but otherwise, trading should be choppy in a range-bound type of manner.